Here's a detailed summary of NVIDIA's Q3 Fiscal 2025 earnings call, designed for clear and concise reading aloud. NVIDIA Q3 Fiscal 2025 earnings call summary. Good afternoon, everyone. Today, we'll cover NVIDIA's Q3 Fiscal 2025 performance and outlook. Financial highlights for Q3 FY25. Revenue. NVIDIA achieved a record-breaking $35.1 billion in revenue, marking a significant 17% sequential increase and an impressive 94% year-over-year growth. This surpassed the company's own outlook of $32.5 billion. Data center revenue. The data center segment was the primary driver, generating a record $30.8 billion in revenue. This represents a 17% sequential increase and a substantial 112% year-over-year growth. Demand for the NVIDIA Hopper architecture is described as exceptional. The H200 GPU saw a significant sequential increase in sales, reaching double-digit billions and marking the fastest product ramp in NVIDIA's history. Cloud service providers, CSPs, accounted for approximately half of data center sales, with revenue more than doubling year-over-year. They are deploying H200 infrastructure and high-speed networking at scale. NVIDIA's Blackwell platform is now in full production, with 13,000 GPU samples shipped to customers, including OpenAI. Demand for Blackwell is described as staggering, and NVIDIA is focused on scaling supply to meet this demand. Blackwell's performance is highlighted by its strong showing on MLPerf training benchmarks, delivering a 2.2x performance leap over Hopper and reducing the cost of compute for benchmarks like GPT-3 by 4x. Gaming revenue reached $3.3 billion, up 14% sequentially and 15% year-over-year, driven by strong back-to-school sales and demand for GeForce RTX GPUs for gaming, creative, and AI applications. Channel inventory remains healthy. Professional visualization, ProVis, revenue totaled $486 million, up 7% sequentially and 17% year-over-year, with AI emerging as a significant demand driver for workloads like autonomous vehicle simulation and generative AI prototyping. Automotive revenue hit a record $449 million, up 30% sequentially and 72% year-over-year, driven by self-driving technology ramps and strong in-market demand. Gross margin. GAAP gross margin, 74.6%. Non-GAAP gross margin, 75%. The sequential decrease in gross margin was primarily attributed to a mix shift towards more complex and higher-cost systems within the data center segment. Operating expenses. Both GAAP and non-GAAP operating expenses increased by 9% sequentially, driven by higher compute, infrastructure, and engineering development costs for new product introductions. Shareholder returns. NVIDIA returned $11.2 billion to shareholders through share repurchases and cash dividends in Q3. Management's forecast for Q4 FY25. Total revenue expected to be $37.5 billion, plus or minus 2%. This forecast incorporates continued strong demand for the Hopper architecture and the initial ramp of Blackwell products. Blackwell revenue. NVIDIA expects to exceed its previous estimate of several $billion for Blackwell revenue in FY25. Gross margins. GAAP and non-GAAP gross margins are projected to be 73% and 73.5%, respectively, plus or minus 50 basis points. As Blackwell ramps, gross margins are expected to moderate to the low 70s, with a goal of reaching the mid-70s when fully ramped. Operating expenses. GAAP operating expenses are expected to be approximately $4.8 billion. Non-GAAP operating expenses are expected to be approximately $3.4 billion. Significant risk factors. Supply chain constraints. While improving, supply constraints remain a factor, particularly for gaming, and are a key focus for NVIDIA. The company is working with a broad range of global suppliers to scale production for Blackwell. China market. The market in China is expected to remain competitive, and NVIDIA will continue to comply with export controls while serving its customers. Gross margin moderation. The ramp of Blackwell is expected to lead to a temporary moderation of gross margins into the low 70s before returning to the mid-70s. Regulatory environment. NVIDIA will comply with any regulations, including potential tariffs, that may arise from changes in administration or geopolitical situations. Key highlights. Exceptional demand. Demand for NVIDIA's accelerated computing and AI platforms continues to significantly outpace supply across all market segments. Blackwell ramp. The successful mass production and initial shipments of Blackwell are a major achievement, with staggering demand anticipated. AI platform leadership. NVIDIA's full-stack, full-infrastructure approach is driving innovation and adoption across various AI workloads, including training, inference, and the emerging field of physical AI. Software and services growth. NVIDIA AI enterprise revenue is expected to more than double year-over-year, with annualizing software, service, and support revenue reaching over $2 billion by the end of the year. Geographic expansion. Momentum is strong in sovereign AI initiatives, with significant GPU deployments and developer upskilling occurring in countries like India and Japan. Gaming strength. Despite supply constraints, the gaming segment showed strong sequential and year-over-year growth, with preparations underway for the holiday season. Automotive improvised growth. Record revenues in automotive and solid growth in ProVis underscore the broad applicability of NVIDIA's technologies. Key lowlights. Gross margin pressure. The initial ramp of the more complex Blackwell systems is expected to temporarily reduce gross margins to the low 70s. Gaming supply constraints. While demand is strong, supply limitations are expected to impact sequential gaming revenue in Q4. Networking sequential decline. Networking revenue experienced a sequential dip, though year-over-year growth remains strong, and sequential growth is anticipated in Q4. Most important statements from management. Jensen Huang, President and CEO of Foundational AI Trends. The tremendous growth in our business is being fueled by two fundamental trends that are driving global adoption of NVIDIA computing. First, the computing stack is undergoing a reinvention, a platform shift from coding to machine learning. Second, the age of AI is in full steam. Generative AI is not just a new software capability, but a new industry with AI factories manufacturing digital intelligence, a new industrial revolution that can create a multi-trillion-dollar AI industry. Blackwell demand and scaling. Blackwell demand is staggering, and we are racing to scale supply to meet the incredible demand customers are placing on us. He emphasized that the next generation of foundation models starts with 100,000 Blackwells, indicating the scale of compute required. AI inference growth. Our hopes and dreams is that someday, the world does a ton of inference. That's when AI has really succeeded. And so, we hope that every company is doing inference 24/7. He highlighted the growth of AI-native companies and the emergence of physical AI. No digestion expected soon. I believe that there will be no digestion until we modernize $1 trillion with the data centers. He sees a multi-year opportunity for modernization and AI adoption, driven by the shift to machine learning and the creation of new AI industries. Execution on roadmap. Our execution is on target. There is substantial engineering work underway globally. He confirmed that NVIDIA is on track with its annual roadmap to enhance platform performance. Colette Kress, Executive Vice President and Chief Financial Officer, strong financial performance. Q3 was another record quarter. We continue to deliver incredible growth. Revenue of $35.1 billion was up 17% sequentially, and up 94% year-on-year, and well above our outlook of $32.5 billion. H200 ramp and Blackwell outlook. NVIDIA Hopper demand is exceptional and sequentially, NVIDIA H200 sales increased significantly to double-digit billions, the fastest product ramp in our company's history. She confirmed the Blackwell revenue estimate would be exceeded. Gross margin guidance and trajectory. As Blackwell ramps, we expect gross margins to moderate to the low 70s. When fully ramped, we expect Blackwell margins to be in the mid-70s. She clarified that low 70s could mean the 71 to 72.5% range, with a goal to reach mid-70s by the second half of calendar 2025. Gaming supply constraints. Our gaming supply, given what we saw selling through, was moving quite fast. Now the challenge that we have is how fast could we get that supply getting ready into the market for this quarter. We're just going to be tight for this quarter. In summary, NVIDIA delivered an exceptionally strong Q3 FY25, driven by robust data center demand, particularly for its Hopper architecture and the initial ramp of Blackwell. The company anticipates continued strong growth, while managing supply constraints and the evolving gross margin profile associated with its new platforms. The long-term outlook remains very positive, fueled by fundamental shifts in computing and the rapid expansion of the AI industry.